What's going on, guys? This is going to be a quick little video going over BPR entry models. If you guys are not familiar with what BPR stands for, it really just stands for balanced price range, and it's a really simple concept that you've probably spotted a bunch of times while you're trading, but maybe you never really knew how to go about trading it. So I'm going to teach it to you guys today, and you can start applying this next week right away in your trading. And I'm going to go through two examples, one on the 5-minute time frame, one on the 15-minute time frame with the S&P 500. And this is a setup that you can find on any time frame. It's not specific to only higher time frames or lower time frames. Just like with any trading model, you're going to find more opportunities and more entries the lower time frame that you go, but you will see this setup on every time frame that there is. In this first example, this is going to be a bullish scenario where we are going to have a long bias, meaning we believe that the next draw on liquidity is to the upside. So this is what a BPR would look like right here. If I was just to zone out this price range right in here, again, we're on the 5-minute time frame, this is what a BPR would look like, right? Where you have price move down with some displacement, leaving behind a fair value gap. But what does it do, guys? It takes out a short-term low or sell side liquidity. And then it comes back, it fails to close below this low, it closes back inside the range, and then we've got displacement right back up, leaving behind another fair value gap. So these are really easy to spot because they form two overlapping fair value gaps at a time. What you can do is you can go ahead and obviously mark out both of these fair value gaps like you would normally in your trading, and not all of them are going to be this similar. You guys can tell that these really don't have that big of a difference in the size of the fair value gap for this example, but some are going to be bigger than others. And in a BPR entry model, what you want to do is you can actually just go ahead and ignore the bigger of the two, because you're going to want to enter off of the smaller fair value gap. So you would set your buy limit, or you would just market execute right at the beginning or the top of the fair value gap in this example. And then obviously for your stop loss, the rule is you only need your stop loss to go below the fair value gap candle. If you aren't comfortable with that and you want to move it down to the recent low, that is totally up to you. It is going to increase your stop loss size. It is going to, hit your risk reward a little bit. But again, that is totally up to you. I would recommend doing back testing on this and, doing whatever you are comfortable with. There isn't really a wrong answer. It's just whatever makes you feel more comfortable, whether you prefer to have a tighter stop protected by this fair value gap candle, or you prefer to have it below the low. So in this example, we're going to put it right below the fair value gap candle low, entry right at the beginning of this fair value gap. And then, target number one, guys, is going to be just low hanging fruit, right? So this internal buy side liquidity level right here at this high, if we go ahead and just mark that out right here. So that would be TP1. So right there alone, you're looking at a 1 to 2 risk to reward. And then obviously there's inefficiencies up in here that you could target, or eventually even this high point right up here, this buy side liquidity level. What I would prefer to do is I would enter right here, I would TP partial here, and then maybe take one more partial off inside of this bearish BPR, and then just ride it out from there with a runner risk free. But just to play this out, we see price return back down into this BPR, this balanced price range. So now this price range is considered completely balanced. We've taken out sell side liquidity. We've got our displacement. We don't really need a market structure shift at this point. We've got a BPR right here, and we've got price being balanced back out. We see price expand with some speed to the upside. We take out this internal buy side at this point. Again, I would be at least risk free, partial if you want, and then from there you can kind of just ride it out, partial again inside of this BPR, this fair value gap, if you would like. And then as you can see, the price continues just to expand to the upside. So that's example number one of a BPR. All right, here for example number two, we're still looking at the S&P 500 now on the 15-minute time frame. And again, this sticks out like a sore thumb. BPRs are very simple to spot, very easy to find. You have to be careful though, because sometimes you could get tricked. You need to make sure that it's in favor with your bias. So in this scenario, you would need to have a bearish bias, or you believe that the draw on liquidity is below where price is currently, and price is going to continue to the downside. And you guys can see here that just because there's a BPR here, it has to make sure that you sweep an internal level of liquidity. So you see that we did that right here. Price expands to the upside. We tap into this liquidity void. We take out these short-term highs. Again, this is the 15-minute time frame, and then what do we see? We see price displace back down, and then you get a little bit of a bonus confirmation because you do end up getting that 15-minute market structure shift with this one. But you have a fair value gap right here. Go ahead and mark that out. If you were watching this in real time, mark out this fair value gap. You see it immediately get disrespected with another fair value gap right here. And the second fair value gap is indeed smaller than the first. You could just go ahead, delete that one from your chart, keep your chart clean, planning to execute your trade as price retraces back into that fair value gap. Again, stop can go either above the high or just above the fair value gap candle is all you really need. And let's play this out in time. Let's see where this first low is going to form. So it looks like the first low is going to form right here. Let's see if it picks up the entry or not. So right there, price comes up, triggers in that fair value gap, and let's see what we get. We actually end up coming and closing the entirety of that gap, but we don't disrespect the fair value gap candle. Price pushes down and takes out that first internal sell side liquidity. So that would be TP1. Right there is a 1 to 2 risk to reward. And then from there, guys, obviously, if you wanted to look back in price and then just go and find other areas of interest, such as, you know, maybe this fair value gap right here, or maybe even this order block right here, extend that over in time. And these could be other profit taking levels for your trade. And just for sake of the example, let's go ahead and play this out and see what we get. So TP2 gets hit right there. So boom, TP2 got hit. And then if you wanted to obviously hold for a longer run, or just depending on where you felt like the next draw in liquidity was, that would obviously be entirely up to you. So I've given you guys 2 examples of how to trade BPR entry models, and one on the 15-minute time frame, one on the 5-minute. Again, you can find these setups on the 1 minute, the 2 minute, the 5, the 15, and I really wouldn't try to go over that. I wouldn't try to find entries to execute on, you know, the 1 hour or higher, but sometimes you can still see them and then look to scale in to the smaller time frames to find your entries from inside of those higher time frames. Hopefully this video was helpful for you guys. Just a quick little lesson on how to trade the balanced price range setup. If this was helpful for you, consider leaving a like, a comment, and a subscription. It does help quite a bit, and it does inspire me to put out more content like this for you guys. But without further ado, have an amazing day, and I will see you guys in the next video.